To today's edition of the London Session Open. Today is March 18, 2020, and it's 10 minutes until 10 a.m. in London when we're doing this market update. I want to welcome you guys. Stuff is happening in the markets. We have crude oil down with some 4% this morning. Right now, 5.17% slide in crude oil as we're actually trading below the 2016 low. So we're going to talk about that, what that means for crude oils going forward. And we're also, of course, going to cover all the other markets that we usually do, like currencies and stock indices and gold. If you have any questions, you can just put them in the chat box. So you're watching this possibly on ATFX YouTube channel. You can also watch it directly here on investingcube.com. In the chat today, we have Maurizio. Good morning to you. And we have as well Paul Owen. Good morning to you. And anybody else that is here, you're most welcome to just say hello if you want to. And don't forget to like the video as well. Okay, we're going to take a look at the markets. And let's begin with crude then. So I think what's happening here is just general people giving up on long positions. So as you know, I was bullish, and I was bullish until as long as you traded above 125.93. In fact, I bought a bit here on March 8th, and I kept it a bit, but then it went down and got me out pretty much at break even. And since then, I've been saying, you know, we could buy it here if we want to, and the market moved out a little bit, and then it went back again. And then when it started to move here, because everybody's so depressed about the virus right now, like everything is sort of slowly trending lower. And we're seeing the same thing here with the crude oil prices. Now, if one did buy here, there's not too much we can do about it. The market is just trading lower, and we just need to accept that we traded below that low. So what's going to happen next? Well, we're going to have very cheap energy bills. That's what's going to happen, because we just traded below the 2016 low, and that was the 125.93 level, and this is US oil. And we need to go back, like we're pretty much the same levels as we were in 2003. And there are a few other lows here, like this low from 2012, which is the 23.56 level. But then the big level here is from 2001, and that is the that is the low here from 2000. Yeah, the low from 2001 at $16.52 per barrel. That's not a lot for 1 barrel of crude. The reason for this, of course, is because of innovation. You have fracking, and with fracking, you can extract oil from places where before, you know, it wasn't really economically possible to do so, and it was very difficult. And now they can do that, and that's why the U.S., for example, is a big crude oil producer now. And before, it was just sort of more conventional crude oil producers like Saudi Arabia that you know was into this, but since pretty much I think the last 10 years or so, fracking has been very popular, and all this excess supply is too much for the markets. And now, of course, we have the trade war, and with Saudi Arabia offering huge discounts, and that caused this thing to slide. Now, from a technical point of view, again, we have that low here from 2002, which is 23.56. That will be your first level. And looking at this now, we have, if we ignore this section here, we have descending triangle. But I think we already reached the target of that. Have still not reached that target of that. We can get rid of this one now as well. So that little line here, this is the trend defining level. So that is the level below that the trend is bearish, and we just traded below here. So you're probably going to see a bit of more panic selling. People are that were holding stop loss orders here, they're going to close them out. That's what's happening now, and we're going to go lower and lower and lower. The question is this though, from a pure risk reward ratio perspective, it's probably not the best thing to sell here. Unless you're a scalper, you want to go in, you're gonna grab a few cents or so. But I don't usually do that, as you know already. So I'm gonna wait, and I'm gonna turn bearish on a corrective move. So might not happen today, might happen tomorrow, might happen on Friday. That is what I'm looking for a better risk reward ratio. So I'm looking for a little bit of a push to the upside. And that is the level here that I'm watching. If we look at other commodities, what we added, this is gold. So what happened with gold is that the price was trading lower and lower and lower. And yesterday, the market took out that level here. So the very imminent short-term downtrend is now over. If you look at this from a big picture level as well, if this is your daily chart, you can see that you have this low here from November 2012, and that level here is an important level for the market. And you can see how the market created two interesting candles that are indicating some sort of end of the downtrend, profit taking, and there's definitely some people here that are buying. So if you do have a very, very strong view on on gold, and you think we will go higher, then maybe one could use 1445 as the key level to be bullish above and bearish below. Because if we take out 1445, we'll go down to the next level, which is 1399. Now in the short term, there are different ways of dealing with this, and we can potentially buy a little bit lower. I'm gonna actually lift this one now. I'm gonna leave it just at the low of today, more or less. So that will be 1490. If we go back to that level, I'm gonna be bullish, and I think we can go up a little bit. So that's one scenario. If you're not very comfortable that this is bottomed out yet, let's give it another day or so to see what happens. But for now, I think we can go up a little bit, and I'll be bullish about 1445. Let's talk stocks. This is the German DAX. So it's quite interesting to see how the markets have stabilized. There's not too much volatility as we have seen in the past. And, you know, we have all these different governments doing good things now. Like the French need to be at home. The Spanish need to be home. The French need to sign a special form. And there's police everywhere enforcing this. And that is to sort of limit the spread. Because right now, as you know, you read this on the normal news, there's so many people that are sick, and there will be many more people that are going to be sick if people don't stay at home, and there's not enough ventilators for everyone. And simple things like antibiotics could run out. Safety equipment for staff is not available. So we have all these things that are influencing. So they're trying to keep everybody at home. And who knows, maybe we'll develop some sort of vaccine. There was already some tests, I told you about that yesterday, trying that out on people. And there was some news about some other things, because there's different parts of the world are doing different things. And they all sort of working towards the goal to find a vaccine or something that can cure people from this disease. And we're starting to see some stabilization. Now, this is also quite interesting. So we're going to take a look at the daily change in numbers in Italy. So I'm going to host, by the way, I'm going to host a special webinar tonight. Let me see, that's the link for that. And we're going to look into some, just need to register first name, last name, email, phone. I'm going to put it here in the chat box so you can check it out. And what we're looking at here is quite interesting. So the number of cases in Italy yesterday soared by almost 3,500. Now, we're going to just take a look. Where are the numbers, right? So there's 31,500 right now in Italy. So I'm just going to make it very, very simple. I'm going to take 1,500 divided by, say, 29,000, which is where we were yesterday, right? We were at 29,000 yesterday. What's the percentage growth? Well, is it that low? I must have got it wrong earlier then. Yeah, no, it is that low. 1,500, so I'm getting this wrong now. And that's 3,500, I thought so. It should be closer, so 3,500 over 29,000. That's a growth rate of 12%. Now, while these numbers are by themselves staggering, 12% is not a huge number. And if this continues like that, some 3,000, then this is actually a huge improvement in Italy, because the growth rate in the past has been some 35%. 40% sometimes. Very, very high numbers. We saw the same stuff in China until they closed the borders, right? Oh, and quarantine all these people. And eventually, they quarantine people when there was like maybe 750 official cases, 650 official cases. That's when they started to quarantine people in Wuhan. And then they extended it and extended it. And then the number still increased to about 80,000. And we'll probably see something similar in Italy as well. So there's going to be more deaths, more problems. This is going to be with us for another 2 months or so at least. But the growth rate is what the financial markets are looking at. And we're going to talk more about that later today. Now, Italy was just the first country. Now France and Spain is in quarantine. And the UK is pushing forwards to that as well. They have told people work from home if possible, but they're not mandating that. They're not forcing people to do it yet. And maybe that's going to change soon as well. I hope it will change. There's already less people in London. I was in central London yesterday, but there's still way too many people, and way too many people are not paying attention to this. But we're starting to see some good signs. And that is actually maybe why the markets are stabilizing. And as well, we're starting to get some bad news from the rest of the world. Like you have Zara, the big manufacturing or big clothes company. They have written down about $30 million in inventory because they closed down, I think, about half of their shops. On the other hand, they open up some 11 ones in that they had previously closed in China. You have, I think it was Air France that needed some bailout, Lufthansa as well, SAS in Sweden and Scandinavia. I think they told 90% of the staff that they might lose their jobs. They're doing that, of course, because then they can claim benefits and things like that. That's why they're all doing this. And we're starting to see now that negative stuff being priced more in, and that's a little bit, I think, what's happening here in the markets. So with the German DAX, the trend definitely remains bearish for now, but has stabilized quite nicely, and now will continue to be bearish below 97.29 because people are just afraid. You can see that in crude, the way it's sliding, right? And I think if we go up to these levels here, so that will be a correction. Let me see if I can put that line there. That will be a correction of some 88,972. If we go all the way up there, I do think people can sell. In the case of the S&P 500, things have actually narrowed down quite significantly. And here you're looking at quite a very interesting pattern. You have a nice little narrowing range here. And I would personally be willing to buy the breakout up or the break to the downside. You can check out the NASDAQ yourself, which has a very nice levels that are in line perfectly, and it's just above the 2017 low. And if we take that out, then we can see much more pain in the NASDAQ 100. But it's good to see that people, at least the market, is starting to stabilize a bit. Now, if you wonder why isn't the Dow, why isn't the NASDAQ, why isn't the S&P 500 moving, it's because I think it has limit down. That's why I think this is like this. The limit down is usually 5%, but I read on the Financial Times this morning that the new limit down was 3.5%. I didn't have time to verify that before I went live, but if it is, then that's where it stopped. So we need to wait until US normal trading hours until it opens. Okay. What else? Currency markets. So I pushed the currency markets to the end, and you know why? Because currency markets right now are super difficult. Like, look at crude, very nice downtrend. Look at stock markets, very nice downtrend. Those are easy things, or easier things to trade. You know the levels, you know what the stop's gonna be, you know all of that stuff. Gold is trying to bottom out. I have a bit of a contrarian view, so it's not super easy to trade. But these ones are worse, unfortunately, unless of course you're trading the Aussie dollar, which is going straight down. So this is the Euro USD, and we're stuck within this sort of megaphone pattern, which is when you have like this because it sort of looks like a megaphone, and the market is short-term bearish. Now in the long term we're going to go down, but this is not a very strong trend, and I'm personally very careful with having any positions on in the euro dollar right now. But yesterday I said look to sell here because this is going to probably go down. It went down, but it didn't touch the sell zone. The sell zone is now here, and this is the 111 level. So as long as you're below 100, 112, 80, 38, we go up here. I think people are gonna sell. If you look at GBP USD, it's as well bearish. This market is bearish below 123.76. It's also extremely oversold. If I take a step back here, you can see that the market is pretty much at its August low from last year. So all that benefit that we got from having Boris Johnson and as well having a government here that has so much already has evaporated. And I think the number one reason, it could be maybe because the UK and the Sweden have had initially, they were looking to adopt herd immunity. I mean, it looks like they were adopting that policy. The UK has now made some significant changes, but I think the biggest issue here is that Brexit negotiations are going to be delayed, right? I think that is the number one reason why people are selling this more than something like the euro. So what's the plan here going forward? What would I be doing? Well, have you guys heard about the failed inverse head and shoulders pattern? So you have an inverse head and shoulders, this one, head, left, and a right. And this was the right shoulder. And initially I thought maybe we were gonna just create a deeper head and shoulders, but clearly that's not the case right now. So you have the failed head and shoulders pattern. We took out this, which was the right shoulder. This was the left, this was the right, this was the head. Neckline goes like that. Difference between the neckline and the head gives you the price target. We took out that one, and this is your target here. Look at it from a big picture perspective. This is something I addressed already a few years ago, and when the market was trading here, and even before that, if you look at it from a longer term perspective, you have a massive head and shoulders here as well. Big head. This is the high from 2007. Remember, at that point as well, UK industry or UK economy was very centered around banks. And in 2017, banks were the rulers of the world, right? And that's when we traded up here. But then since then, the effect of banks have diminished. Now breaking away from the EU will diminish even further because you can't manage too much of the EU business in the UK. You need to manage that over there. So you have the big head, left, right shoulder. You have the break, and that suggests we can go down to 62.30. You also have a low here from March 1985. We reach that. That will be a 35-year low, and that could definitely come in play if we trade much lower, because you have the low here from 2016, and if we take that out, we can go down. And you might say, well, that might not happen. Well, I think the Aussie dollar just took out its 2008 low, which was under the big financial crisis, and this one is heading now to its 2001 low. So I think this year is going to be a year where we'll break more records, and this by itself is a descending triangle. You got support, and you draw lines like that, you get yourself a descending triangle pattern. You like that, and then you take the base or you take the midpoint, and it gives you this target. So you have a bunch of different setups here all telling you the same thing. Now, I know you guys don't trade on the monthly, neither do I, but that was just to give you an idea of what may happen if we trade below 1958. I will look now though in the short term, let it go up. If we can go up to 122, then I'm going to be bearish. I'm going to be bearish below 122.76. If this level holds, we take out trend funding level, then we're going to go back just trading within the big range of 119.54 and 133.67. Dollar yen. Let's talk about dollar yen. So dollar yen should really be lower, but you're having some, I think it's the US government bond yields, US 10-year government bond yields. Let's see if I can find it. So this is the US government bond yield. So this one went into proper panic mode, really panic mode. So in the beginning of the year, we were like at 2%, 1.97 or so. And then panic mode, the whole thing goes down to 36. basis points. That's super cheap. It's like Germany almost. I think Germany is minus 50 or something. But yeah, very, very negative. And now we're having that big push to the upside because people here, bond market investors are usually to even put a position on here, you have to have significant amount of money, and it's primarily the banks that trade these markets, and they have superior people. I will say they have, superior people in understanding of the market. I would say, and they have also longer term views. They can hold positions for longer, and so on and so on. And I think they realized themselves that they were pushing it. They were pushing it too much, and the yield should not be here. In fact, this is bullish. The fact that this is not going down is bullish for stocks because it tells you that these guys are not as worried. Or maybe it's going up because all the quantitative easing, but more realistically, they're just booking profits because they had a very, very good start of the year. And in fact, they had a very good year last year as well. And higher yields tend to push the dollar yen higher. And I think that is what's influencing things here now. Normally, though, this should go lower in times of crisis. We can use the pitchfork, and the pitchfork has done an okay job. It's not my preferred tool in volatile market conditions like now, but the tool is telling us if you want to sell, or if you want to do anything, you should probably be selling because the big trend is bearish, and it tells us we should be selling at 109.05 with stops maybe at 112.46. So that is what the market here is telling us. Okay. We covered all of the main markets. Let's see if you guys have any questions. So Stefan says, hi Alex, congrats on all your calls about how coronavirus will evolve last 2 months. You've been spot on. Hope you profited. Yeah, I managed to do quite good for myself this year. This year started out really well with some crypto trades, and I've been trading some stocks, not stocks, but stock indices, and that's been going good as well. So I'm a much happier man now than I was last year. And you know, trends, we need trends. Well, I need trends to make markets, so to make money, and this is exactly the type of market I need. So you say I'm still short dollar CAD this time against 145. Are you still bullish? Why don't you go long yourself? How high do you think this can go in the next couple of months? So I am bullish. However, the reason why I'm not adding is that if you look here, I'm all about the risk reward ratio. And the risk reward ratio for me here is not just there. This one here was better. We went down, corrected very close to support. But right now, the last level here, this is the low here. And I know, like right now, the markets are in panic mode. So people are just pushing and pushing and pushing, and sometimes it is like this, and you can, if you get it right, you can make a lot of money, and if you get it wrong, you lose a lot of money, of course. But up until recently, remember, buying here and then grabbing 238 pip, that's a good money, right? Good amount of pip, and I hope it still continues to be a good amount of pip for most people. So I would have booked profits here. And now it's way up here, so I wouldn't be buying here. In fact, this is very, very fragile. When and if something is gonna happen, it's gonna flip very quickly. The Euro USD, for example, is a very good example where it just went up and up and up and up, and it didn't really look like it was gonna go, like it would ever stop, and now it's tumbled. So that's why I don't want to get involved in dollar CAD right now. And as for dollar CAD, by the way, so what we added. So if one wants to get involved, I think 140 would be interesting. Realistically, we're gonna hit 140 today. Probably not tomorrow. Probably not, but 140. I think right now it's probably targeting 144, and then you have this big high at 146.96 up here. I hope you manage to get out as you want. As well, I mean, what you do is obviously up to you, but I will be careful. I don't like to sell against currency markets like that. Like they go up, they want to continue to go up. So I usually never go against the trend in a currency like that. The only thing more comfortable going against the trend, buying on dips, as I explained before, are stock markets, because stock markets they're easier to assess. I think the yield on the S&P 500 right now is 3%, I think. Let's find that out. The dividend yield, according to this page, is it's 2.8, 2.3. So this is your yield right now. So what would you prefer to hold? The US 10-year government bond yield, which gives you 1.15. This one, if you buy it now, will give you 1.15% in the next 10 years. This one, it's not guaranteed it's going to give you 2.3. It's probably going to come down a bit. But the upside in stocks is extremely high, I think. Obviously, there is a situation here where stocks can come down with 20%. Government bond yields, you're definitely going to get that back. You know, if you're dealing with the U.S. Treasury, and as long as the U.S. doesn't go bankrupt, yeah, you get your money back. But you can see here how, just from even this perspective, it's interesting. So buying the S&P 500 now would be something that for example, I would prefer. And you have all of these, some of these companies like Apple. Yeah, of course, no one wants to buy Apple phones right now. 2 years from now, people will be buying Apple phones. Of course, not all companies have the money to be able to that has the money to be able to survive for the next few months, and that is something that that could create a problem. Okay, guys. So got a question here. We say, unfortunately, it looks like a slaughter. Yeah, I'm terribly sorry about that. I think this caught a lot of people by surprise. A lot of people, they can't calculate in exponentials. They don't understand interest on interest. Even us, like a lot of people that are into finance, well, a lot of people that are into trading, they don't understand interest on interest. So when people tell me, oh, I do 4% every day, I'm like, yeah, you be the richest man in the world in, like 2 years. People are looking for these crazy percentage returns because they don't really understand percents. And it's the same thing here. Like the average growth rate of something, of this virus, if you let it do whatever, it was growing with about 35% per day. You take that and you add 100 days to it. You see that's what you need to multiply with. I mean, I don't even know what this is. The millions start here. That's the millions. So, and people don't understand that this doubling effect, and where things just going. It's the same thing with results, or with trading. And I think a lot of politicians as well, what they're doing is that they look at the economy and they're looking at people's health, life, and economy. They're trying to balance both. If you go to the World Health Organization in their sort of what's it about, they will tell you there that they're balancing the risks to the world health and to the economy. And I think what they did wrongly, a lot of the politicians, is that they focused too much on the money, on the economy, instead of stopping things at the right time. Even though the Chinese did this very good, Chinese government. Okay, so we're gonna finish off with the last question here. How do you discipline yourself to trade right? Okay, so if you have a system, so you need to have a system where you know when to buy, know when to sell, know when to put your stop loss, know when to take profit, and you also need to know how much to risk per trade. If you have all of that, you have like a framework, and with that framework, you know when it's time to trade and not to trade, and you also know exactly when you're doing right and when you're not doing, when you're doing right and when you're not doing wrong, because you can just check, did I follow my plan? Now, a lot of people, they don't they don't know exactly. They switch between strategies, switch between things like that. They need to you need to have some sort of a system, and that will help you to be. As you probably can hear, I'm working from home, by the way. It's my son there in the background. Anyway, I think we're going to wrap things up. Anyway, if you have your system, it's much easier to stay on track. And then sometimes you step away from the system and you get punished because you start to lose money, and then you're upset with yourself. I'm like, oh, why am I such a blah 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 blah? I should not have done that, you know. And then you do less of that, and then you deviate again a bit because everybody's human, and then you do less of that, and then you do less of that, and then eventually it becomes more natural. Now, something I learned really quickly is I don't risk too much per trade. I don't risk more than 1.5% of my money per trade. So I do that. Sometimes I deviate, but just in very specific situations. And when I do deviate and I risk more, I have very wide stop losses at that point as well. So I will deviate sometimes, but most of the time I don't. And that was kept me alive. And I know directly, you know, if I take a big loss, I know directly, like, I didn't do that good. Now, we do have actually more education for you. So we have what's called the InvestorCube Premium Forex Trading course. And it is free, but you need to have an account with ATFX, which sponsors the premium course. All right, so they're sponsoring the course. It's totally free to have an account with ATFX, and you just need to sign up here, and some guys are going to call you, and they can answer any questions. And this course is available for all their clients under their client portal. You'll have that. It's 4 hours of education that I have produced. I covered 2 complete trading strategies, advanced money management, and I also covered the basics for people that don't really know too much or people that want to sort of go through things again. We cover as well a bit of fundamentals as well. So it's about 4 hours of content. So effectively, what I learned since I started trading in 2006 is in this course. And this course was last updated just a few months ago. I think it was 6 months ago. So this is a very good step if you want to walk into my footsteps to quicker reach profitability. Of course, there's nothing guaranteed that you're going to be profitable just by reading this, because unfortunately the markets do change and I also have to adapt. But at least you get a well-grounded understanding in the markets and how trading works and systems works. And maybe with that, sometimes you need to make a few changes, like everything else, because it's evolving. Okay, you can check this out as well. If you have any questions, you can always email me at info@investingcube.com. Otherwise, you can just put your details here, and and the guys are going to call you. And it's called the Investing Cube Premium course. Again, if you have any questions as well, you find any difficulties, just email info@investingcube.com, and I will be able to help you myself. Okay, guys, have a great day, and I'll see you guys hopefully tomorrow around the same time at 9:45 a.m. London time here on the webinars page on investingcube.com and as well on the YouTube channel. Have a great day and stay safe out there. Thank you.